good evening to all participants, depending on the geography you are. Before we proceed on the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. Please note that we have mailed the presentation deck of the transaction, and the same is also available on the company's website. However, to maximize interaction with investors, we have decided not to go through the presentation page by page. Instead, Tarak would possibly run you through the key aspects of the transaction, and should you require any specific doubts from the presentation to be clarified, you can either write to us or to the company secretary at GMM, and we'll be happy to answer the query. To take us through the key highlights of the transaction and answer your questions today, we have the top management of GMM Pfaudler, represented by Tarak Patel, Managing Director, Ashok Pillai, CEO, and Jugal Sahu, CFO. We also have the top management of the Pfaudler International Group, represented by Thomas Kale, CEO, and Alexander Pontner, CFO. We will start the call with a brief overview of the transaction and given by Tarak, which will be followed by Mr. Thomas, who will give a brief outlook of his view of the transaction, after which we will throw open the floor to Q&A. With that said, I now have the pleasure of handing the call over to Tarak. Over to you, Tarak.
Thank you, Divakar. Ladies and gentlemen, thank you very much for participating in the conference call this afternoon, where I will take you through the recent acquisition that we just completed of the global Pfaudler businesses. I know many of you have many questions, and we will try our best to answer them through this call. Honestly, for us at GMM, today is really a very historic day. It's very rarely that an Indian subsidiary, an Indian joint venture, gets to buy out the controlling stake in its global business of the parent. It's really something to be proud about. And for me personally, being the third generation of a family business, to finally take GMM Pfaudler to the international stage is a very proud moment for me. It's also something that as a country, as we move towards a more self-reliant India, I think this puts us in a very good position. And now finally, after being with Pfaudler for so many years, we now can control our destiny. This transaction is very unique from the standpoint that it combines the strengths of three very different partners. Private equity, who brings in efficiencies, cost optimization, a promoter family that brings in focus and entrepreneurship, and then obviously the professional management of Pfaudler, who bring in their specific skill sets and abilities. Further, as you will shortly see, all three partners remain invested in the business. All three of us are completely aligned when it comes to creating value in both the international, and then that business will flow into the GMM Pfaudler business. As you all must have already seen, GMM Pfaudler does become the ultimate holding company, with the revenues of the entire global Pfaudler business flowing into GMM Pfaudler. So once again, a very proud day for us. After being associated with Pfaudler since 1988, finally we have been able to complete this transaction and take the destiny of this company into our own hands. And over the next few years, we hope we can create value both internationally and in India. A quick update on the transaction. It's absolutely a transformational, a game changer for us. It makes GMM Pfaudler the undisputed global leader when it comes to the highly attractive glass-lined market. It's basically given us access to 12 factories in 8 countries over 4 continents with more than 1,500 employees. We built on the 30 years of relationship between GMM Pfaudler and the rest of the Pfaudler Group. We know most of the Pfaudler units very, very closely. We know many of the employees that work in this group as well. Over the past 5 years, since I took over as Managing Director of GMM, I have worked closely with the new management of Pfaudler International, the management that came in after DBAG, the private equity fund, brought Pfaudler International from NOV, and we've been working very, very closely. Thomas has been on our board since the start, and we closely work together to complete some of the main initiatives of the group, and we will continue to work together to take the group in the right direction. We have also, over the last 5 years here at GMM, shown our ability to scale up, to ramp up operations. As many of you know, and having followed the company, we have shown incredible progress when it comes to both growth as well as improvement in our margin profile. A broad, quick overview about the economics of the transaction. So the stake that GMM Pfaudler will acquire in the global business amounts to about 54%, which will be worth about $27.4 million. This will be about $70.4 million of debt and $10 million coming from internal accruals. The stake acquired by the Patel family will be 26% for an amount of $13.2 million. This is done on a pro rata basis. Together, GMM Pfaudler and the Patel family will have 80% control of the international business of the Pfaudler Group. The last 20% remains with DBAG, which is a private equity player. So as you can see, all three parties are invested in the global business. All three parties are clearly aligned to create as much value as we can in the international business of the Pfaudler Group. The SPV that we've already floated, will be based out of Luxembourg, and obviously this transaction is subject to shareholder as well as antitrust approval over some specific jurisdictions. We expect the transaction to close in about 4 months' time, and hopefully we can hit the ground running. Like I mentioned earlier, integration is something that we don't really have to worry about. We've been working together for quite some time, so from day one we can start building on the initiatives that we've planned. The combined entity will have a revenue of around 2,000 crores and an EBITDA margin of close to 260 crores for the 12 months completing year. And going forward, we expect the revenue by 2024 of about 2,800 crores with an EBITDA margin of close to 16%. This is without synergies, and there are plenty of synergies that this transaction brings to the table, and let me spend a minute talking about that. The reason Pfaudler Group, this is the right time from our side to purchase Pfaudler Group is DBAG and the Pfaudler management has spent the last 2 and 3 years really modernizing the factories around the world. Pfaudler now has new facilities in Germany. They closed out a 100-year-old factory in the middle of the city and moved to a much more efficient, smaller footprint a few kilometers away. So they have a brand new facility in Germany. They have a brand new facility in Italy, and maybe about a few weeks ago, they just started their brand new facility in China. So before all the improvements start flowing into the group, we thought that this was the right time to acquire Pfaudler so that we can benefit from the improvements that are going to come in the coming quarters. Further, Pfaudler also over the last few years has done about 5 bolt-on acquisitions. They have expanded their product ranges. Companies like Interseal, Normag, and new technologies like acid recovery have also been added. There's obviously also capabilities of beneficial low-cost sourcing from India. This is something that we are working on. We have already shown over the last few years that model has been very successful with our Swiss subsidiary Mavag, where about 80% of the manufacturing is done here locally, and then the final finishing, testing, assembly is done in Switzerland. The customer gets the best of both worlds and gets a much better and cheaper product, but at the same time, Mavag has been able to increase market share and profitability. If some of you who've been following this company, when we bought Mavag in 2008, it was a 5 million Swiss franc company, and today it's about a 15 million Swiss franc company and makes good margins as well. We also aim to implement GMM's operational excellence model across the Pfaudler factory, added with cross-selling of some of the GMM Pfaudler products. We believe that both the product ranges will be enhanced significantly, and the Pfaudler network will now have much better access to both products of both groups of companies. We also will then have access to Pfaudler's innovation and technology. As many of you know, Pfaudler has been the market leader for quite some time. When it comes to glass lining technology, they have a very strong R&D department where they do develop new glasses. All that will now be available to us. We will also not have any restrictions when it came to exports, and certain markets which are value-driven can be directly catered by GMM Pfaudler as well. There will be no significant royalty payments between the group now, since everything is going to be consolidated at the GMM level. That will not be required. Just to close out before I open this up to Q&A, I also just want to also tell you that the timing again is quite well timed, because we used the months of the global pandemic to complete this deal. As you all know, there's significant tailwinds in both the chemical and pharmaceutical sectors, not only here in India, but we believe that a lot of new investment will come back into Europe and the US. Those countries have realized that they were too heavily dependent on India and China, and hence we believe that investment will drive growth for the Pfaudler Group as well. Thomas has also worked along with DBAG to really change the culture of the Pfaudler Group over the last few years. We brought in a lot of new people as well, a lot of professionals. I think that also bodes well for the future of this company. And all in all, we believe that we are now set to really start benefiting from many of these initiatives that are going to come in. And if we continue to work together, we will remain the undisputed leader, but we do aspire to become, the world leader in the chemical processing equipment space. There's a lot of work to be done, but there's definitely a lot of scope for companies like ours to really take advantage of the situation. So with that, let me introduce my colleagues from Germany, Thomas and Alex. Thomas is the CEO, has been on the GMM Pfaudler board for quite some time. Alex has joined maybe a few months ago as the CFO of the Pfaudler Group, and together with them, we will be spending a lot of time to making sure that all the synergy and revenue as well as cost improvements are seen in the coming months. Thomas, over to you.
Thank you very much for the nice introductory words and explaining the deal structure and what we do here. And let me say I'm so happy to be on board and the CEO of the Pfaudler Group, and we are very, very excited about the deal. It's going to be extremely positive for us. We are working well together, as Tarek said, since several years. We are strategically 100% aligned, and this is a great opportunity to, on a global basis, really implement our ideas. In the recent years, as Tarek already mentioned, we have focused majorly on three things. One thing was modernization of our manufacturing footprint, especially in Europe and in China. And pretty much we are through with this installation and the new sites and ramping up phase. And the benefits of not only cost benefits, but also having the right capacity at the right space will be benefiting our businesses in the future. Parallel, we also build up a portfolio of products and equipment that suit our core competence quite nicely. So our core competence and majority of our business is still what we call the technical space, or the glass-lined reactors and mixers. But in addition, we have acquired companies that bring to the party adjacent products, whether it's lab glass, whether it's borosilicate glass, whether it's PTFE, a special polymer for corrosion resistance, or whether it's Interseal, creating seals. Every vessel that's being sold and used has to have a seal, and we got our own technology, and it's a patent technology, and we have a great USP there. And we are planning and having already plans installed that this Interseal will be also manufactured in India for the Indian market, and we are very certain to capture market share in this business as well. At the same time, we also created not only a better Pfaudler brand. The Pfaudler brand is a very old and established brand, but we had a branding strategy implemented where all our product lines are part of the branding family. So we call our brands for special applications, for example, Pfaudler Interseal, Pfaudler Normac, Pfaudler Adlon, and this is very well received within the market, since we have this created what we call a one-stop shopping, let's say, environment for our customers. We have also started to build up our engineering group in order to sell more systems. Systems is where we also offer to our customers and sell to our customers process know-how, and the entire plant will be designed and can be designed if the customer desires. And this is a good service that our customers want from us, and we can provide this in the future. We have a strong order pipeline in the new field of asset recovery. We have quite a lot of projects offered, and we will receive first significant orders in the next couple of months. I'm certain of that. One of the differences between the Pfaudler International Group and GMM Pfaudler is over the years and the cultures in the Western world is much more service related and aftermarket related. We are selling a lot of our customers services and parts and maintaining their business. In the meantime, way more than 30% of our revenue is coming from service. And the reason why that is so interesting is because service is providing us with superior margins compared to some other products. And I think with this knowledge and the way how to do service, there will be opportunities also given in the areas that GMM Pfaudler is serving so far. So again, we are happy to be here. We are looking in a exciting, bright future, and we are fully committed and working hard to bring it to a success.
Thank you, Thomas. Thank you very much for that. So, ladies and gentlemen, let's now open it up for Q&A, and we'll be happy to answer any of the questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Also, before we begin, we'd like to inform participants that in order that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Good evening, gentlemen, and congratulations to you, Tarak sir and Ashok ji, and welcome Mr. Thomas to GMM India.
Thank you, Sanjay.
Yeah. So, Tarak sir, my question is, we have acquired is a very value and earning accretive. We are running through the valuation metrics and understanding. We are still not coming out of the shock how we could do this acquisition at such a valuation where the earnings and growth are ready for us and the future growth prospects are lying in ahead of us. Can you explain and how are we going to turn around Pfaudler? Because margins of Pfaudler International are low, and you pointed out that some manufacturing and will be brought to India. And how they will, your strategies would like to know, sir?
Sure. So I think from a valuation standpoint, let me just say this is because it's important for people to understand. DBAG still remains invested in GMM Pfaudler. They still owned more than 50%. So it's important that this transaction was done at an arm's length transaction because it's a related party transaction. I think DBAG also understands that their value in GMM Pfaudler is significantly higher than what their value in Pfaudler would be. So at no point would they want to compromise their value here at GMM Pfaudler. So this deal was done on valuation based on a very pragmatic approach from both sides. At the same time, we believe that we did get a deal that is going to be helpful for us, and we believe at the end of the day that we are quite happy with the valuation. The valuation also, we assume that there is some debt level, there is a small pension liability as well in the Pfaudler group, and the enterprise value is closer to around the 150 million mark. However, the equity value, like I mentioned to you, is about $50.8 million. So all in all, we are quite happy with the valuation. If you go through the document again on the website, it will give you some more clarity in terms of the different items considered in the valuation, and that should give you some clarity as well. So now in terms of margins, definitely, GMM Pfaudler has a higher margin profile than the Pfaudler Group. However, having said that, there is definitely scope for improvement. One of the major reasons why we believe that the scope of improvement is going to come is because we are already seeing improvement in the 3 facilities that have just been launched. The Pfaudler Germany facility is already showing profitability. China just came online right now. The Italian has been showing some profitability improvement already. Along with the profit improvement plan that Pfaudler has in place, we believe that will start improving. At the first level, if I today were to be honest with you, if I told you that if both GMM Pfaudler and Pfaudler as a standalone company without any synergies were to hit their plan, that would be significant and quite good for the group. But on top of that, we're going to also build synergies, which will be additional improvements in profitability. So we believe at a conservative, very, very conservative way that we can be up to a 16% EBITDA level in about 4 years' time as a group. And I think that will be something that will be quite easily possible. I think the hard work that has already gone in will start bearing fruit in the coming quarters.
So, sir, are we going to bring the manufacturing from Europe to India and then export, or how it will work? Because over there, manufacturing costs are very high. And adding to that, even certain norms are that even European nations want locally procured material. Correct me if I'm wrong. So how do you handle this both?
So you're absolutely right. And like I mentioned to you, Mavag is the prime example of this success, where 80%, 70% of the labor-intensive work is done here locally in India, and the final finishing testing is done there, right? So that allows them to increase output. For us, we are also willing to do the metal work. So if you think about a glass-lined reactor, we can do the complete fabrication of the metal body here in India and then supply it to them, and then they can do the glass lining locally there. So the customer at the end of the day gets the local German, Italian, American quality. However, the fabrication work, which is the most labor-intensive part, can be done here locally. Having said that, we can also look at spare parts, smaller components to be exported from India. And then lastly, there are certain markets where Pfaudler doesn't have much of a presence, where their pricing strategy is quite high. In those markets like Southeast Asia, Middle East, Eastern Europe, that's where GMM Pfaudler can sell directly fully made Indian equipment as well, but through the Pfaudler network.
Thank you. The next question is from the line of Nishant Naveen from Temasek. Please go ahead.
Hey, Tarak, thanks again for taking time and listening our questions. I think I just wanted to have a quick follow-up on the valuation question. In terms of, you talked about the EV is about 150 million. How does the GMM Pfaudler valuation fit into this? If you can just explain that a little bit more.
Right. So just to clarify, GMM Pfaudler's valuation does not fit in. We've only bought the global assets of the Pfaudler Group as a standalone entity, ex-GMM. GMM's valuation, revenue, profitability is not included in that valuation at all. So GMM shareholding does not change. However, GMM has basically bought 54% of the global business, along with 26% from the Patel family side, and the balance 20% remaining with DBAG, the private equity fund.
Okay, got it. That's very well.
Thank you. The next question is from the line of Manish Sharma, who's an individual investor. Please go ahead.
Thank you. Can you tell me about how much debt will be there in the company post the acquisition, including if there's any debt in the entities we are acquiring?
Right. So maybe Alex, do you want to take this question?
Yes. Hello together. First, it's Alex Kompner, CFO of the Pfaudler International Group. Happy to meet you here in the call. The Pfaudler International Group has currently debt, really bank debt of around $55 million. This will be rolled over and taken by the GMM Group. And then also, we, GMM, is in the discussion of partly finance this acquisition with part of debt and part of existing funds. But the key, the 55 million of Pfaudler International, will be taken over.
And Alex, there's also some cash on the balance sheet, right?
Yes, there's also, yes. We expect cash to be around 30 to 32 million. So in fact, the net debt is slightly above 20 million.
Yes. So what the bank in Europe agreed to is a rollover. The lead bank, who are quite happy with the way the business has performed, have allowed us to roll up the current debt into the new SPV, and that debt is going to be ring-fenced from India. And like I mentioned to you, the India debt level will be about $17 million for the acquisition.
All right. And I also read in your press release that the target entities will also be paying $1 million of interest to Pfaudler UK. What is this for?
Right. So between signing and closing, so we signed, last week, obviously, and we will close in October, November. So during this period, $1 million of revenue, $1 million of EBITDA will be paid to DBAG.
Thank you. The next question is from the line of Bhavya Joshi from Chris Portfolio. Please go ahead.
Hi, Tarak sir. Thank you for the opportunity and congratulations on the acquisition. Sir, I had just one question. I was just trying to make sense. What was the trigger for the acquisition? Is it DBAG had some closure nearing? Is it the closure of the fund? It was near that led to you buying out the stake, or was there anything else?
No, so it has nothing to do with, because their Fund 6, which has been invested in this business, still has a 6 to 7 year horizon left, so there's no pressure from their side. They remain completely committed to the business. But I think the reason why we did this transaction now is obviously they've always seen us as a strategic investor. They always realize that we are the natural and the logical the persons to buy this company. And I would also like to say that the performance over the last 5 years has given them a lot of faith in our capabilities to allow to do this transaction. And then over the last few months, I did go to them multiple times with multiple different structures, and then we finally agreed on something that we all found was really, really good in terms of alignment, was right in terms of pricing and valuation, and we decided to go ahead. And over the last 2 or 3 months, when the global pandemic was hitting, we had some intense rounds of discussions, negotiations, lawyers, and then finally ended up signing last week. So all in all, it was quite a good process, something that we are quite proud of. And I think from both sides, we have both happy owners who continue to remain invested and committed in the business.
Okay. Cool. That's it. Thank you. That's it from my side.
Thank you. The next question is from the line of Hasmukh Gara from Finvest Advisors. Please go ahead.
Hi, Mr. Tarak Patel. Congratulations for this great news, which we never expected. Just 2 questions from my side. One question is, what happens to the 50% equity stake that currently held by Pfaudler UK in GMM Pfaudler?
Right. So it's actually held by Pfaudler Inc. That has been carved out and it remains with DBAG. They remain invested at the GMM level completely. As you know, they are financial investors, and at some point they would look to dilute their stake, but as of right now, they are completely invested in the company going forward.
Okay, so that stake will remain with them only?
Yes.
Okay. My second question is, in the press release you have mentioned that Tom Elzin, Managing Director of DBAG, has said that as a former board member of GMM, I can say that we have built a strong relationship with Patel family and remain committed to support. Now it is important, the business through expansion of the product portfolio by add-on acquisitions. So are we planning any further inorganic opportunity now in a group?
So, we always are looking at opportunities, and, DBAG is always very, very supportive. We really want to emerge and make this company really the world leader when it comes to not only corrosion-resistant equipment, but really chemical process equipment. I don't think there is a single company in the world today that can really be a one-stop shop. It's a very fragmented market, and I think if we can make some good acquisitions going forward, it can very nicely enhance our product portfolio. And just to add here, I think maybe Thomas can say maybe a word or two on what his thoughts are as well.
Yes, we always had in our mind to buy and build this company. And as I said before, the first 5 years of DBAG involvement and ownership, the focus was on a couple of restructuring and modernizations of the business by manufacturing. We have implemented a new sales force. We brought in new people. We having now a global sales approach more than in the past. The subject of cross-selling, that all the salespeople can really fill the sales channel with all the products that we are offering, is a basis for a portfolio strategy and for buying more and acquiring more companies that are adjacent to our business and have a nice fit. And we have a couple of nice ideas. We have started discussions and approaches, but of course, at the stage that we are in, we cannot be more specific. But we have further ideas, and we want to grow the company organically and inorganically as we always did.
Thank you. The next question is from the line of Kiran Nayak from Modi FinCap. Please go ahead.
Thank you for giving me an opportunity, sir. So, how much is the Pfaudlers internationally? What is the market share in the world market?
So Pfaudler International's global market share for glass-line equipment is about 40%. GMM Pfaudlers in India is obviously a little bit higher, 55%. And I think we can also look to increase the market share globally with the use of GMM and Pfaudler joining hands. That's something that's quite possible.
Okay. And in the international market, who is our close competitor?
So we have the second, the biggest competitor. So right now, I did mention we are the undisputed market leader with a size close to $260 million. The next competitor is a French company called Didiplik, which about revenues of close to $160 million on a like-to-like basis. And then after that, there is no real significant player after that.
And in India, who is our competitor?
In India, there is a company called HLE Glasscoat, which is the biggest competitor here in India. We had a French company called DDPS here in India as well. However, they have recently sold their Hyderabad factory to GMM Pfaudler and are now exiting India as we speak.
Thank you. The next question is from Srinivas Iyer from Rockford Consulting. Please go ahead.
Congratulations, sir, for making our company a truly global company. What kind of growth prospect do you see in the other subsidiaries? Since our company has become a global company, do you have any plans to list GMM Pfaudler in US?
No, so obviously on the first part about growth rates, growth rates in European Western countries are not the same here in India. However, we do believe that we will see now some improvement in those growth rates, especially with local manufacturing coming back to those shores. We've been seeing a lot of traction in Europe and in the US. China and India continue to remain strong, so we are quite optimistic of growing. There is no other plans right now to list this business in any other jurisdictions. And Thomas, maybe you want to add a word or two about the growth rates in Europe and the US?
Well, we're looking at industries, the chemical industry and the pharmaceutical industry, of course. We have seen the chemical industry with steady growth anywhere between 3 and 5% over the course of the years. Of course, some regional differences. The Americas came back strongly the last few years since they were investing in their own country and manufacturing much more than the years before. Pharmaceutical, we're seeing a steady growth of 6% in those regions. And I think after the corona, it's fair to say that we see movement in discussions of our customers that they are building redundancies back in Europe, back in the US, and making more investments locally than they did in the past. So I think for quite a while we see better growth rates.
Thank you. The next question is from the line of Ronak Vora from AUM Advisors. Please go ahead.
Tarak, hi, this is Saurabh Shah. Congratulations. It's great to see such ambition.
Thank you.
Couple of questions, Tarak, in terms of, the new businesses that were mentioned, the asset recovery, I guess, the non-glass and, process equipment. What is your sense of, how fast, how large that market is and, really what kind of growth are you seeing with the new management structure consolidated with Pfaudler Germany in the next few years? Do you see a very aggressive kind of market share plan over there, or is it more likely to be just what the existing businesses? Some in next 5 years, 3 to 5 years, what kind of growth rate would you think you could get?
So we definitely, are looking at a double-digit growth rate in some markets and some geographies. We have seen possibility that could be achieved. But again, like I told you earlier, we have been a little bit conservative with the numbers, but I don't see any reason why we can't achieve those growth rates. The idea here was to stabilize the manufacturing facilities. I think that's something that has already been done. The new facilities in Germany and Italy have already shown significant improvements. If we can implement some of our operational excellence models into those factories and really ramp up production, that would give the sales force much clearer, more the visibility, and in turn reduce the delivery times and then again get market share. Like Thomas mentioned, there are other complementary product lines like acid recovery where we are very, 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 very close to winning some business. That same acid recovery is something that we have now also implemented in India. We are going out quite aggressively. We are close here in India as well. Then Thomas and Pfaudler Group have recently purchased an Interseal, a sealing mechanism company. We are now localizing the seal to make it ready for the Indian market. So we are really working together, and I think now there is clear alignment in terms of where the revenues and profitability would be flowing into, right? So going after market share, going after some businesses which Pfaudler was not currently going after, there is clear the alignment from that standpoint so that everything flows into GMM and value is created at the GMM level.
Okay. And also just given your current margins, 16%, I know you have facilities now, I guess, in other European countries. But over a period of time, 3 years, do you think 3-4 years, 16% is being a bit conservative given the synergy that you expect and better utilization of the new plants in Europe?
Yeah, so to be honest with you, these numbers are a bit conservative. We always felt that we should give you numbers that we are sure of. In GMM as well, I've always been very forthcoming when it came to numbers and margins. So I think it's always better to, target a little bit conservative number, but then outperform that. And again, see, the synergies, even though we've done it in the past, it will take some time because right now in India we are very busy. We need to add a little bit of capacity when it comes to fabrication. Not too hard to do, but now with our new Hyderabad facility, that opens up another, more capacity as well. So all in all, we are quite well suited to cater to the European market. We have to get the mindset, the culture that the salespeople can really go and sell any product from all over the world rather than just trying to fill up a local factory. Thomas, you want to add something on this?
Well, absolutely. We have made sure that the new salespeople that came in, some because of retirement, but we had installed a global sales management that Pfaudler Group did not have before the years of 2015. This ensures actually our capability and usage of the sales channel and also the technical background to sell all kind of products that we are bringing to the table. And we have now salespeople asking the management, well, when getting new products that we can sell them, we want to sell more and broader. And I think there are a lot of opportunities out there.
Thank you. The next question is from the line of Gauri Srinivas from A to Z Financial Services. Please go ahead.
Congratulations, sir, firstly. I just wanted to know the shareholding pattern is a bit confusing. If Mawag and GMM Pfaudler will hold 54% in Pfaudler and Pfaudler owns 50% in GMM Pfaudler. This is a linear circular pattern. Can you make it a linear structure for easy understanding?
Yeah, so it's not very difficult, it just seems difficult. GMM Pfaudler has a 100% subsidiary Mavag. So together GMM Pfaudler and Mavag will own the 54% of the global business. The GMM Pfaudler shareholding is not part of the structure at all. It's been carved out and it remains with DBAG. It has nothing to do with this current structure.
Thank you.
Thank you. The next question is from the line of Bhavya Shah, who's an individual investor. Please go ahead.
Yeah. Hi, Tarak. Congratulations. And my question is, we are saying that, most of the manufacturing work will be done at the offshore in India to benefit from this acquisition. But in India, we are already constrained with the capacity. So how GMM management is planning to address this challenge?
Yeah, good question. I just mentioned it that recently we acquired the DDPSI facility in Hyderabad, which should give us definitely more capacity here locally. And again, it's not going to be overnight where we switch over everything to India. There are manufacturing facilities all over the world. They will be continue to manufacture. However, we'll find some way of reducing cost there, either through certain components coming from India, fabricated bodies, and try to find really the best kind of model which keeps the local factories running as well, at the same time reduces our total cost. But at the same time, we will also look at creating capacity here. And when I say capacity here, it does not have to be glass lining capacity. We should really look at fabrication capacity, where some of the labor-intensive work can be done here locally. And then, like I told you, more of the final finishing, testing, completion, glass lining can be done in the local facilities and then shipped to the customer.
Thank you.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang Equities. Please go ahead.
Yeah, thank you for taking my question. Sir, you said that the overall valuations of acquisition is around $150 million, and $55 million is equity and $23 million net debt is debt. So balance $75 million is what? So can you explain a bit?
Sure. So 70 million is pension liabilities. This pension liability is spread over 3 geographies, US, UK and Germany. The US and the UK pensions are fully funded. The German pension is not funded. German law allows pension liabilities to remain unfunded. So German pension is a closed plan. No new employees are joining that plan. The average age of the employees on that plan is about 79, 80 years old. And the interest rate to calculate the pension is about 0.9%. Historically, the lowest it's ever been. Any increase and improvement in interest rates will see this pension going much, much lower over the coming years.
So you want to say that for this 70 million liability, how much liability can come to the company? If it is fully funded, then why you are considering it as a part of consideration?
Yeah, because it's a debt-like item, but there is no liability that can come to the company. Alex, do you want to jump in and maybe spend a minute or two on the pension?
Yes, I could. It's as said, for the acquisition purposes, it was considered in the enterprise valuation. However, usually if it comes to the leverage calculation for the Pfaudler International Group with our banks, we don't consider it. But it's on our balance sheet, and as Tarak mentioned, especially the pensions that we have in our German entities were considered. And they are fully dependent on the interest rate development. And as Tarak mentioned, currently the interest rate is really low, and therefore the pension value on our balance sheet is high. If the interest rates increase again, our pension liabilities drop significantly.
Thank you. The next question is from Vijay Chawla from Oracle Wealth Creators. Please go ahead.
Good evening to the entire team.
Good evening.
Let me congratulate all of you all for the excellent synergy and acquisition, and especially the team of GMM Pfaudler for their vision, strategy, and timing of the entire episode and the way going forward. Really be proud to be associated and a shareholder of your company.
Thank you very much. Nice to hear that.
Okay. Now, my only single question is, what would be the debt level at the consolidated level after the consolidation is done, after the acquisition is done, and what would be the debt level of the consolidated entity after the 4 months?
Sure. Alex, do you want to take it? I can give you a broad level number. It's a consolidated net debt to EBITDA would be about 2.4 times. Alex, do you want to jump in and just maybe give them what the total number is?
This is, as Tarak mentioned, the debt to equity is the 2.4 times. And
debt to EBITDA, you said?
Yes, debt to EBITDA.
Okay. Debt to equity?
Debt to equity is around 1 time.
Okay. Thank you so much.
And then it's a little bit higher if we consider the minority interest.
Okay. Thank you. Thank you so much.
Thank you. The next question is from the line of Tanush Mehta from Dalal & Broacha. Please go ahead.
Firstly, sir, congratulations on the very good news. I have a few questions. So my first question would be that when we say that our consolidated top line would be around $200 million, so for GMM Pfaudler as a consolidated entity, we would be having only 54% of the share. Am I understanding that?
We will be owning a majority interest in Pfaudler Group, and by that account, all the total revenues of Pfaudler Group and the profitability will flow into GMM Pfaudler. So our total 12-month consolidated number will be around the $260 million mark.
Okay.
So we are basically going from about a 600 crore company to a 2,000 crore company with this transaction.
Okay. Okay, sir. And my last question was that, so why was it that GMM Pfaudler, because like, why was it in that GMM Pfaudler would acquire the entire holding rather than promoters also holding there as well, and even in the Indian entity as well? So like, we could have had a straight holding by GMM Pfaudler into Pfaudler.
Right. So that's a good question. And the reason we wanted to actually do it this way is to also show to investors and to show to the market that we are basically committed and we believe in the business and we're going to put our own the money into it. You are right. Eventually, we will find some mechanism by which GMM Pfaudler itself will hold the entire piece. At a later date, we'll think of something there. But right now, we didn't also want to leverage GMM Pfaudler to such a high level. Hence, we felt that coming in as a family and showing our committed to the business also will be an important message to send.
Thank you. Before we take the next question, a reminder to participants to please limit your questions to 2 per participant. The next question is from Maulik Shah from Atlas Ventures. Please go ahead. Mr. Maulik Shah from Atlas Ventures, you may go ahead with the question. There seems to be no response from the line of Mr. Maulik Shah. We'll move to the next question. The next question is from the line of Omkar Kulkarni from Shree Investments. Please go ahead.
Hello.
Yeah, please go ahead.
Yeah, my question was regarding, just now you mentioned you will be moving from a 600 crore company to 1,000 crore company. So what would be the approximate EBITDA figure for that, and what are your targets for both top line as well as bottom line in say next 3 to 5 months?
Yeah, I already mentioned that. So the combined entity FY21 on a 12-month basis should be about 2,000 crores and about 260 crores of EBITDA, which is around 13%. And by 2024, we should have an expected revenue of 2,800 crores and an EBITDA margin close to 16%. This is without synergies. This is a number that we believe we can strongly achieve and improve upon.
So for FY21, it would be around 2,000 CR, right? 2,000 CR.
Yeah, on a 12-month basis. So it just depends on when the transaction will close. But yes, a pro rata basis, the pro forma basis, it would be that number.
And on a consolidated basis, you would be expecting around 2,800 CR by 24 FY.
Yeah, FY24 with a 16% EBITDA margin.
Okay. The next question is around like you already having 55% market share. So like how do you plan to grow this, because you already have significant chunk of this?
Yeah, so in India we have 55%. Globally we have closer to 40%. But even in India, I'm not sure if you follow the company, but one of our main competitors has now left the country and sold us the facility in Hyderabad. I think that will give us additional capacity and will also help us capture additional market share in the South region and grow our presence there. And in India also, things are changing quite significantly. People are now looking at building world-class facilities where branded equipment, high-quality equipment are very, very important. GMM Pfaudler is the market leader, and there's no second really market leader when it comes to technology. If all things are equal, if we can pretty much give them the right time frame in terms of delivery, most customers would like to buy it from us.
Okay, so follow up to that is that because of this corona, you are seeing significant upside in your demand, but how sustainable is this demand in the next 2 to 5 years from chemical as well as from pharma point of view?
Right. So that's something I think, we are quite bullish on. We believe both chemical and pharma will do significantly well over the next few years. People are looking at alternatives to China. People have already started investing heavily here. Pharma is still not picked up, and we think that pharma will pick up with the government norms coming in around making intermediates locally, with the pharma city coming up, the new clusters being defined. So all in all, we are quite confident. This is one industry that has stood the test of time when it comes to the pandemic, and how well the pharma companies are doing now. So I think it's only a matter of time before we see investment coming in.
Thank you. The next question is from Dhruv Bhatia from BOI AXA Mutual Fund. Please go ahead.
Good evening, team. Congratulations. The first question is on, you talked about an FY24 expected revenue target of 2,800 crores. You currently talked about a combined entity revenue of 2,000 crores. Is there an incremental amount of capex that will be required to achieve this incremental 800 crores revenue?
No. So most of the capex that has already gone in has already been done. Like I mentioned during my start, Pfaudler Group has spent close to $25 million over the last 2 years modernizing their German, Italian, and Chinese facilities, brand new state-of-the-art facilities. In GMM Pfaudler India as well, we've already completed the acquisition of DDPSI, plus 2 new furnaces are on its way here, which have already been accounted for, and they should be starting maybe in a month's time. So there's no significant capex to reach this number required.
Sure. And, in India, you do talk about that there is a good amount of replacement market which is coming up for the glass line equipment. But my understanding would be that the international markets would be anyway saturated in terms of fresh capex that will be all replacement led. Is my assumption correct?
Yeah, it's a combination of both. I think India is seeing some improvement in replacement. Europeans do see replacement demand significantly. However, we believe that will switch slightly. I think we will see some new investments coming in Europe. Maybe Thomas, you want to jump in and just maybe spend a minute or so here?
Yes, I think you're seeing the picture totally right, that in Europe and Americas we had for many years a lot of replacement business, even though there was significant size of replacement business. The maintenance business and service business is quite significant and growing. We see more and more customers doing a reclassing approach. In addition, incrementally, we will see new plants, new sites coming up that haven't been there before, while customers here in these areas are changing their minds towards not moving from one country to the other and moving back, but they're going to build redundancies, additional capacities that are required, that in crisis times, countries and regions are properly serviced.
Thank you. The next question is from the line of S.A. Narayanan from Capricorn Research. Please go ahead.
Tarak?
Yes.
Question 1. What will be the broad shareholding pattern of GMM Pfaudler?
The broad shareholding pattern remains unchanged. There will be 50.4% held by DBAG, 24.6% I think held by the Patel family, and the balance with the public shareholders. So there's no dilution, increase in share capital, nothing. Everything remains the same.
Great. My question 2 is, what will be the debt equity ratio of GMM Pfaudler after acquisition?
Debt equity ratio of GMM Pfaudler. So I know we are borrowing close to $17 million between GMM and Mavag, our subsidiary. We are going to use $10 million of internal accruals, plus we are borrowing about 40 crores for the DDPSI. Jugal, do you have that number handy with you?
Yes, our net worth is about 270 crores and our borrowing is about 160 crores. So that's the ratio of 160 and 275.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
I have 2 questions. First on this, pension liabilities of $70 million. If you can elaborate on that and what are the chances of this falling on the combined entity?
So again, like I mentioned to you, the US and the UK pensions are fully funded. We've done an actuarial valuation. There is no liability there. The German pension, it's very, very normal for German companies to have unfunded pensions. This is a closed plan, so no new employees are joining. The banks don't even consider this as debt when they look at the borrowings. Currently the people in the plan are close to 70 or 80 years old, and the interest rate are the historically low that they've ever been, 0.9%. With every 100 bps improvement in the interest, you will see a $7 to $8 million reduction in pension. So going forward, we expect the pension in Germany, the liability to reduce significantly, but it will never have any impact on the P&L. It's only a balance sheet item and has no further effect.
Sure. And secondly, on the Pfaudler Inc., on the financials of the Pfaudler Inc. So in that, their revenues have remained stagnant at around $175 million for the past 3 years. EBITDA margins have seen some improvement during FY20, with EBITDA margins improving to 8.2% from around 5% in FY18 and FY19. And the gross margins have also been, pretty low at around 20-23%. So, if you can highlight what kind of improvement you see in the Pfaudler, in Pfaudler over the next few years, and what kind of steps are we going to take to improve their margins and growth going forward?
Right. So I think we spoke about this a little bit. So basically, we are counting on the fact that we have 3 new facilities, modern facilities, which are now just coming online. The German one just started a couple of months ago and is already showing profitability. The Chinese one started a few weeks ago and has good backlog. The Italian one as well is a brand new facility. So these are much, much more efficient, restructured, lower number of people, lower number of overheads. So we will see significant improvement coming from there. We also see new products, cross-selling, new technologies coming in, which will definitely add to revenue and profit improvement. And then if we add cross-selling and low-cost sourcing from India, from China, we can definitely look at further improving profitability as well as revenue and market share.
Sure. The Chinese facility that we have, that is under that is 100% subsidiary of Pfaudler, or it's a JV with some local company?
No. All the Pfaudler units across the world are 100% owned by Pfaudler. GMM Pfaudler was the only joint venture that they have. All the other units are 100%, and they all will now belong under the GMM Pfaudler umbrella.
Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Thanks for creating huge amount of wealth for Indian investors over the last few years, sir. I just wanted to know about the opportunity size for this acquisition. Are the tailwinds strong for our company in India only or worldwide as well, sir?
So I would just like to say two things. Obviously every business has risks, but we as management need to mitigate those risks. I think if you have strong ethics and good integrity and you work hard, I think most things will fall into place. I think that's something that we've shown here in India. I think that we have been very forthcoming and transparent when it comes to sharing information. We strongly believe that there is global tailwind when it comes to chemical and pharmaceuticals, not only in India. We believe that the Pfaudler team that is now on board is very, very capable. We really believe that the company is really at the crux of really building on the foundation that DBAG has put in over the last few years. And I do believe the next few years for this company will be really, really good. So I think all in all, I believe that this story will continue. Sometimes in life you have to take a little bit of risk. You have to go outside your comfort zone, and this really puts us into the global bracket. For an Indian company, it's a moment to be very proud of, and this was a natural and logical thing for us to do. And like I said earlier, control our own destiny, and we will make sure that we work and put in our blood, sweat, and tears over the next few years to make sure that all the initiatives are implemented and all the synergies are extracted.
Yes, sir. And if you can highlight about the sustainability of the current tailwinds being enjoyed by India pharma chemical sector, API sector, which is benefiting us also, sir.
Sure. So I think India is going to remain strong. The government has recently launched the 59 KSM or the intermediates. We know that many of the chemical companies have been spoken to by the government. They're looking at moving into pharmaceuticals. Many of the smaller pharma guys are also buying many, many more equipment. So there are definitely tailwinds here. You must have seen the performances of numbers of the companies like Divi's Labs, Laurus Labs. Everybody's doing extremely well, and I think that will translate into more investments coming in.
Thank you. The next question is from the line of Jason Soans from Monarch Network Capital. Please go ahead.
Thanks for taking my question, sir. Just wanted to know, in terms of synergies, how does it impact, obviously glass-lined equipment is one thing, how does it impact other segments like heavy engineering and proprietary products? So some outlook on that?
Sure. So those two products also continue to do quite well. Like I started the year of Q1, I told you heavy engineering is going to have a breakout year this year because we started the year with a very good backlog. I think what's also important is that the Pfaudler network has already picked up on the GMM Pfaudler heavy engineering business. I think they are very, very excited to sell this business as well for us across the world, and we're seeing a lot of traction there. But all our business lines continue to be quite strong. And maybe, Thomas, can you jump in and maybe talk a little bit about your order backlog as well and just explain to them in terms of what you see in Europe and the US?
Yeah, and as you said that we have focused on the modernization and building blocks in order for implementing our strategy, we already see commercial success in terms of great order intake. Our order backlog end of May was way beyond 100 million. US dollars already, and orders are coming in still strongly, and even the COVID crisis didn't really slow down the order intake, what is very, very beneficial, and it seems to be a great success. And from that point of view, the commercial success and the turnaround from that point of view, order intake is seen.
Okay, thanks for that. And so just one final thing, just a confirmation. The first, the shareholding pattern, 50.44% was held by Pfaudler Inc., which is now gone to DBAG. Is that right?
Yes, exactly. It was actually the whole company was owned by DBAG, and as part of this transaction, they will retain that 50% through Pfaudler Inc. It is just a financial holding that they will have, which will be carved out from the group. All the operating companies will move under the GMM Pfaudler umbrella.
Thank you. we'll be able to take one last question. We take the last question from the line of Satyen Dariwal, who is an individual shareholder. Please go ahead.
Hi, Tarek. Congratulations for this acquisition.
Thank you.
I have two questions. How much of the turnover is coming from GMM by 2024? As you said, it is 2,800 crores.
Yeah, so I think around, now that's a good question, and I don't have maybe the full revenue split here. I don't have it in front of me, but I was, if you remember, we had a plan for Udaan, and we had said 1,300 crores by 2025. So if you use that as a yardstick, you can then calculate. So maybe 1,200 crores will be coming from GMM Pfaudler.
Fine, thank you. And one more question. Of late, you have done very well on the heavy engineering equipment fund, and mostly it has been in the oil and petroleum sector. So have you any plans of this integrating into your global setup now?
Yes, absolutely. So as I mentioned earlier, we've seen a lot of traction. The last few orders that we got through the Pfaudler network, one was for floor in the Middle East through the Pfaudler Italian office. We got a couple of orders in Spain through the American office, the Pfaudler American office, and we also supplied really heavy engineered equipment, high value, high margin business to the US markets as well.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
So again, thank you everybody for logging on to this conference call. I know that the transaction itself came as a surprise, and it is a bit complicated. Again, I think once you understand it clearly, you will understand the nuances. I think it's important to understand that the alignment between the three partners remains. I think that's very important. You need to also understand that GMM Pfaudler becomes the ultimate holding company. The idea of all the partners is to create as much value as we can at a GMM Pfaudler level. So we will always look out for the best interest of GMM in terms of product enhancement between the two groups. There'll be a lot of synergies. There'll be a lot of synergies when it comes to manufacturing as well. GMM Pfaudler's lean production model can be implemented around the world as well. And with the current tailwinds that are there in the industry, in chemical and pharma, we believe at least the next 3 to 5 years is something that we can show significant improvement. Many of you might even join our AGM, which is planned on the 27th if you're a shareholder. And obviously we will continue to update you. If you have any specific questions that you need answered, you can reach out to our company secretary, and we can then answer those for you. But otherwise, thank you very much again, and we look forward to speaking to you very soon. Thank you.
Thank you very much. On behalf